Great day. We got a lot of things to cover and not a lot of time. So I'm just going to tell you right now that the crypto market is crashing. I think we can all see that around it. So I want to give you a little bit of perspective and talk about where I made all my money. Hint, it wasn't in a bunch of these bull markets. So I want to talk to you today about is just to give you a little perspective. First of all, we're going to take a look at Simon Dixon. He's been an early investor since 2011, and he gives you some bulletproof advice for surviving and thriving in these bear markets. Also, we're going to take a look at what I call the good news. Fidelity is going to get into a retirement savings account. We're going to talk about just how much that could actually be. We're going to take a look at how even Congress, 21 members are getting into it. And then also we're going to take a look at how Fort Worth in Texas, my great state, is the first city in the US to mine Bitcoin. So if you don't think things are bullish, well, you can just take a look at the market itself and that'll just show you what's going on. So let's just break into it, shall we? So let's just first do a market recap and see exactly where we are at. So today, not a great day, but it is the bear market. Let's just call a spade, right? So what I want to do is just show you that these are the bad days, and these are the days where, of course, you can short it, you can go long, or whatever. Don't go long, but these are the days that me and a bunch of other people actually live for as the price starts to go down. And I talked about this numerous times. I mean, I said, look, there's the earnings week is coming out. Maybe the earnings are good. Maybe the earnings are bad for the traditional market. Are we correlated? I think we are. And you can see it right now. Like we're down 5.4%. And S&P down to 1.9, which almost 2%, which is like a horrible day for TradFi. And even like, again, NASDAQ, which is what we're more closely correlated to, is 4%. Here we are at 5.4. So again, I mean, hopefully it picks back up, but is that the big thing? No, I'll show you exactly what I'm talking about. And again, this is just one of those days where you have to just just call a spade and said, look, we're in a bear market. And here's the thing. You're going to be going around and you're going to see a bunch of negative news. You're going to see stuff like this all over the place. You're going to see how, is it time to get out? Is it time to sell? Is it time to, remember, news is great if you want to have anxiety and you want to just, hear all the bad, because sensationalism totally does sell. And that's just how it is. So everywhere you look, you're going to see some pretty negative news. But again, if you're here for the day-to-day, that is not what this channel is about. This is not investment advice, just investment opinion, but I'm here for the long haul. And I'm telling you right now, these day-to-day operations is not where it's at. I'm going to talk to you real quick about where I made all the money. And if you're new to the channel, this is no surprise to you. But if you're not new, if you're new to this channel, this is no surprise. This is where I made all my money. And like I always talk about, when in doubt, zoom out. This is the Bitcoin chart. We can go all the way back to 2014 if you want to, when it was worth nothing. But this is when I started, right around here. Yeah, November or so, when it actually went up to around 19,000. I thought I was a genius. See this time frame? February 2018 to around right here, December 2020. This is where I made all my money. I don't make money up here buying and selling little stuff right here. And of course, I mean, you can find those altcoin gems and things like that, but I'm not making money right here. I'm stubborn. I dollar cost average, and I just go this way. And that's really what it comes down to. That's where I've made all my money. It's not rocket science. It's not something that it requires a degree to understand. It's just time in the market is more important than timing in the market. That's going to lead me to my next point. I'm going to introduce you to Simon Dixon. And if you haven't followed Simon Dixon, he is one of the guys that if you go to any video on my channel, let's see here. Let's bring this one up. Let me pause this. If you go into the links down below in the description, these are the guys I watch all the time. Coin Bureau, CTO Larson, The Best Answers in the Cryptoverse, Hashoshi, Big E, Crypto Stash, and Simon Dixon. You can find his information and his link right there. And you can't miss him because he's got the worst thumbnails of all time. But it doesn't matter about the thumbnails because he just gives, look at this, goofy. But he gives the greatest advice. He's been investing since 2011. And what he's going to share with you right now is pretty much just gold. It's about 2 minutes, and this is where we're at in the bear market. So just take a listen. First of all, let me stop the screen. Let me share it, the tab, so you can actually hear what he's saying. He's going to talk to you about how to survive a Bitcoin market. So just take a listen. Let me mute myself.
the individual, the company, and the country. Now, Bitcoin bear markets are awesome for individuals for a couple of reasons. The first is that there's less noise. When there's less noise, you get to consume content like this from people. I don't want to toot my own horn, but there's not a part of Bitcoin and the crypto sector that I haven't seen, having been there right from the beginning. So when I share my content, I'm speaking from the perspective of somebody that has achieved all of my wealth by investing in the sector, way more than I could ever imagine. I was deep in debt before starting, trying to create a bank, and having supported over 150,000 investors, creating the largest community of investors investing in this sector right from the beginning. From the foundations of Bitcoin to the foundations of Ethereum to all of the companies in between, and all of the different booms and busts and cycles that we've seen in between. And those that have become incredibly wealthy, and I'm talking billionaires, were those that had a longer term perspective and got back to basics. And so the great thing about Bitcoin bear markets is those YouTubers that were just pumping leverage trading and wrecking all of their subscribers, that were looking for the next big shiny object and the next Bitcoin killer and then the next Dogecoin killer or Shiba Inu or all of these different things, they all get wrecked. They lose their money. They overtrade. They speculate. They create tax liabilities. And the YouTube influencer that was pushing what they were being paid to push disappears during the bear market. And you just get the real community of hardcore people that are having the time of their life because they get to accumulate Bitcoin at cheaper rates the longer the bear market lasts. So if you're living by a few of my mantras, the mantra that I used in order to take myself from $150,000 deep in debt, in fact, if it included my mortgage, which was about $200,000, $350,000 deep in debt, to achieving more financially than I could ever imagine possible, was because each month I set myself a goal that I would have more Bitcoin each month than I did the previous month. I measured my wealth in Bitcoin, not in the dollars that it was. So during the crashes, my dollars or my pounds or my euros or my yen or my renminbi would buy me more Bitcoin. And so it's a big shift in thinking, and that is what has worked for many of the wealthy investors at Bank to the Future. So, two things for the individual.
Oh, sorry about that. So yeah, that's just it. It's the basics of basics. I know, like, when people take a look at this, they're like, first of all, I know if you just got in, you're probably hating me right now because you're like, how dare you say those, as I see my portfolio just keep going down and down and down. Trust me, I've been right there, and I was just as ticked off as you were when I would see these people going, oh, you just got a dollar cost average, just get into it. I'm like, how do you know me? You don't know me. I know you because I've been you. I know exactly where it is. I can't give you financial advice. I can just tell you what my story was, and that's where it gets to me. So again, you can find this gentleman, the link below for Simon Dixon, and he's got great advice. He's been one of the early investors into Coinbase and a lot of different exchanges, Kraken and stuff like that. So he's been around and he's seen it all. And just the same thing that keeps saying, it's not rocket science. And this again is why I'm also still bullish, because it's all about being future-proof. And we just take a look at what's going on and what's happening right now in the space itself, which if you take a look at it, this is one of the reasons. So there was a great story. There's a bunch of great stories, actually. Fidelity, there's also the Congress and Fort Worth, Texas. So check this out. So Fidelity is going to allow retirement savings allocation to Bitcoin and 401k accounts. And before I go on, why is this so important that Fidelity is going to allow this? It's because of this. You know how much money's out there sloshing around in the world? Well, I always talk about this visualization. I'm going to start from the ground up. There's over a quadrillion. That's a real number, quadrillion of money. Each one of these little squares is $100 billion. And this is These are contracts, options, swaps. These are all derivatives. That's over at a quadrillion just for that, maybe 500 trillion, give or take a couple trillion, who knows? And then if we take a look at global wealth, 360 trillion. Take a look at real estate, 280 trillion. Global debt is 250 trillion. This was in 2020. Stock markets have just a measly, roughly 100 trillion. So when I think about this, and I'm like, where can it go? The question is like, well, how much money is actually in retirement accounts? And if you take a look at this, this is from March 2022. This is from ICI Global. Who's that? ICI Global, leading associated represented regulated investment funds. Its members manage total assets of 31 trillion in the US, serving more than 100 million investors. So it's not just some fly-by-night company. This is what they say. There's almost $40 trillion in retirement assets. So when I see these types of stories, I'm like, this is just the beginning. This is great. Fidelity retirement accounts. MicroStrategy, shocker, will be the first employer to use a new product, which will be made available to other employers by the middle of the year. David Gray, head of workplace retirement offerings, said, yes, we're going to start with Bitcoin, and then we're going to move on to other digital assets in the future. And that's just Fidelity. And they've got trillion of assets under management. I want to say 2.3. Correct me in the comment section. But that's just Fidelity. So we take a look at that. And then we take a look at this little gem. Congress members are tiptoeing into crypto. This was just a research analysis found that 21 members of Congress or their immediate family traded crypto investment products and stocks in crypto-related businesses. And out of the group, 7 members serve on committees in the Senate or House that hold key regulators accountable. To me, this is just, they're raising the alarms right now, which is kind of funny because no one raised alarms when all members of Congress were investing into stocks, even though they were part of those regulation committees. It's amazing to me that they're just getting that on the table after, well, I don't know, 50, 60, 70 years, allowing them to do that. Anyhow, that's just that part. And then lastly, more good news as far as like not regulation, but just as far as like government getting into it. Fort Worth, which is right outside of Dallas, is the first city in the US to mine Bitcoin. And they're going to mine it right out of City Hall. So there's going to be 3 Bitmain Antminer S9 mining rigs. Will run 24 hours a day, 7 days a week in a climate-controlled information tech wing of Fort Worth City Hall. So look, I know the market is sucking today, and I know what it is, but like I've said before, when in doubt, zoom out, and you can kind of see the big picture. Nothing gets done overnight. It just takes a long time. And that'll lead me to my last point. Will conclude everything for the news. But I want to give you an even bigger perspective. I had on Steve Ehrlich. He's the CEO of Voyager. He was also the ex-CEO of eTrade. And he's going to talk to you about the things that were happening in the late 90s when stocks are being purchased and how eTrade come about. He's going to talk about Amara's Law. He's going to talk about just the things that he hears and sees as the CEO of a billion-dollar company for all these institutional investors. I was giving James a lot of slack for it over on Invest Answers, but you know what? After talking to Steve in this interview, I'm like, yeah, I see where things are going. So check out this video. It's a long one. It's about 20 minutes, but it's got great information, especially with what's going on in this space. So let me just pull that up. And that is it. After that, if you want to stick around, we'll do Q&A. Here we go. All right, everybody. So as promised, I brought in someone who could really give us a little bit more perspective on what is going on. We've got Steve back on the show, CEO of Voyager Digital. Steve, thanks for stopping by.
Oh, thanks for having me again. I appreciate coming back and spending some time with you.
Yeah, it's going to be a good time. So I know you already had a great interview with DJ over at Buy the Dip, Sell the Tip. And I want to expand on a couple of things. But first, before we do that, I want to take a trip down memory lane because there are people, I don't think we understand where we're going until we know where we've been. So I want to talk about just a little bit of a Voyager review. How did we get there, or how did we get here? I want to talk about your first blog post that you ever did over on Voyager. And also you talk about being bullish in 2019. And we're going to fast forward to today. What are you seeing as the CEO of a billion-dollar company and the different things that are going on? Is it the same? Is it a little bit different? Then we'll go over just a rapid fire review of what you and DJ talked about, which is the Voyager loyalty program, 5 tiers, the token burn, the BlockFi Nexo, Celsius, cease and desist, debit card equities, Canada, Europe rollout. And then I just want to expand on one part, which is what separates Voyager from the BlockFis of the world in the eyes of the regulators and talk about that new hire of Brian Brooks, former OCC, on the board of directors. So what do you think?
We got a lot. Let's get going. A lot to cover. Happy to do it. Looking forward to it. And hopefully everyone listening and watching actually learn something or get some more clarity on where Voyager is and where we're going.
I think that's the big thing. So let's start here. Because again, we don't know where we're going until we know where we've been. And I know people will say, it's easy. Just flip a switch, Steve. Why can't you do that? Well, this is why. I've never run $1 billion company. That's why I'm glad you're here. So let's take a trip. So in 2018, you guys launched Voyager. And then really in 2019 is when things got going. So in February, you had your app launch on the iOS. And that was only in 10 US states. I'll remind everybody, only 10. And then you only had 17 cryptos available, like Bitcoin, ETH, Litecoin, and you also IPO'd, right? Somewhere around there.
We did an RTO. Yeah, we did an RTO in February 19. We did a reverse takeover of what was then a traditional mining company, not a Bitcoin mining, traditional. We took that over and got the approval in February 2019. So we were off and running.
Perfect. And then in March, you did the rewards. In August, you added more crypto. You had a 4x increase in customers. You added from 10 states to 49 US states, plus you added in 3 US territories, my new home, Puerto Rico. And then in October, you added 8 more cryptos, plus you did the Android app, and you had an interest program of 3% Bitcoin. Sound about right so far?
Yeah, that was really the kickoff time, was October, November 2019 was when we really, it was consistent, I think, with NobleCon, where we met a few folks down there and started building the business.
Perfect. Now let's fast forward to 2020. This is the breakout year, as I talk about. Growth comes with growing pains. January 2020, USD becomes FDIC insured. February, you acquired Circle Invest 40,000 customer base for crypto trading. You guys really started to blow up. September 2020, you increased the yield to 8.5%, Bitcoin and USD, and you added up to 50 more cryptos offered on the platform. And in October 2020, you had a merger announcement with LGO, which was the French exchange. And now that you've taken that over, sounds still right on track?
Yeah, 2020 was pretty busy, got a lot accomplished. And I think when you flip to 21, we even accomplished more. So it was just all part of kind of growing into our body, right? Growing up and maturing as a company.
I can see that. Now 2021, growing pains and balance. This is where we all get these stumbles, but this is where businesses become great. In March, you had the wait list implemented, and people blew me up for that one. Customer support and new hires. In 2021, you had your audit complete because of the Voyager loyalty program or the Voyager swap. QuantStamp did that. Your token swap was ready. June 2021, thank you for the reoccurring buys and made DCA available for me. In August, you did the token swap, BQX, LGO, Voyager, and the Voyager loyalty program was rolled out. And in November, you did the debit card, which I just got mine about a month ago.
Yep. Yeah, I think that 21 was super busy. I think probably the number one stat in there, the stuff that you have on there, plus, that's in 21, we opened 1 million funded accounts and went from 250 million of customer assets January 1st to 5.6 billion by the end of the year. So in addition to that, in addition to scaling the business, we added a boatload of customers and assets, which really put us on the map and kind of leads right into where we are in 2022.
Yeah, perfect. No slacking, right? And now this year, so far, you've went from 17 in the beginning to over 100 plus cryptos in the platform. You got partnerships with Dallas Mavericks, and then also Fundstrat and Market Rebellion, because you're going to also offer equity or stocks on Voyager as well. And then you actually did a 10x growth in employment in 2 years. Now you've got over 250 employees. And I think you've got on speed dial for developer deployment and hirings. So far, so good.
Yeah, I probably had 3 requests today to sign off on new developers. So yeah, it's nonstop. It is pretty, 22 has started off pretty fast as well. But as we've stated, it's about bringing more product. And, we're starting to get there and things are starting to roll out.
Yeah, great. And the reason that, of course, we did this is because everybody wants things now. And I just got to remind people that it's not as easy as just going, let's flip this switch and get this done. There's a process to it. So that's where we're at, which leads me to my next point. There's some things that only you can give us right now as far as like perspective, because you've been around since the 90s when you started off in eTrade, CEO, and all those things. So I want to take you back a little bit and just tell us your thought process and how things are repeating or not. as far as the market. So this is your first blog post you ever did in 2018 for Voyager. And you said, hey, when I started in the mid-90s, online trading didn't exist. So I want everybody to remember that. In the 90s, online trading didn't exist. You had to call your broker. They would go on the floor. They would start shouting just like you'd see in the old days. And then you would buy those options, those purchases, right?
The movie Trading Places, what you saw in Trading Places in the pits, that's how it was. And John and Pete and Tom Lee all can attest to that because we were all around those days and it was mayhem. But that's how you did a trade. There was no electronics in trading. There was no electronic trading. There was no send your trade down to the internet. The internet barely existed in the mid 90s. So we've come a long way, but people fail, to forget that was only 25 years ago. It wasn't 100 years ago. Like when cars, when Henry Ford built the first car, right? I mean, this is 25 years ago. And we've come a really long way when it comes to the financial markets. But it's interesting because we do make those, we're going to go into it, the similarities and differences from crypto to the financial markets. And there are a lot, and we'll get into that. But I think that people have to have that mindset that even when companies like eTrade and Ameritrade and Schwab, were built, and Schwab was a big brokerage house before electronic trading, but then eTrade and Ameritrade really jumped on the electronic trading bandwagon. It took years to build their systems before they even got started to the marketplace. Like eTrade started building their systems in 94 and brought it to the market like 97, 98. And so 3-4 years before they even took their first system into the marketplace. So 3 to 4 years. Now we bring crypto companies to the marketplace in a year or two. And you're expected to have the same quality systems that those guys have. But by the way, we passed them in quality because they're legacy systems now because they're 25 years old. And, that's some of the similarities and differences just on technology.
Yeah. And it's the same thing here, like you talk about, because we've got crypto and we're moving into the next generation. And just because of eTrade and that technology, the birth of online trade in the 90s went from 5% from the previous decade to over 20%. That's a pretty big jump, in my opinion.
Yeah, and it's probably the data today, probably the electronic trading, because institutions in the 90s, when it started, and then even in the 2000s, there weren't a lot of institutions still trading electronically.
Yeah.
And they were still calling down to their brokers on the OTC desks to do it.
Yeah.
Now, today, institutions still do a lot of phone business, but at the same token, they're using electronic systems to execute trades, which is why I think there's going to be such an adoption in crypto as more and more institutions come in. They're going to stop the OTC desks as well to manage the orders, and they're going to start using technology to do that as well.
Yeah, I think we're right on track. And this will lead me to my next point. In the same year, you also wrote this, why you're bullish in the crypto market. And I found this part interesting. This thing called Amara's Law, which states the impact of all great technological change is often overestimated in the short run and underestimated in the long term. I think that's one of the problems that we have right now with the bear market. And you talk about crypto should be a long game. It's a good strategy with the internet, and it should be a good strategy with crypto. And just remember, in 2001, Amazon stock was $6. In less than 20 years, it hit $2,000 a share. So that would be the thing that I come back to you about for perspective. Do you see the same thing going on with crypto? Do you see how things are working? Is it the same thing? And what do you see as a CEO for these institutional investors?
Yeah, that's exactly what I see, is that Amazon at $6, to 2000, 20 years later. I think the time frame investors today is much shorter than what we thought of 20 plus years ago. I think people want instant gratification on a lot of trading, but you can have instant gratification on some investing, but then you have to still have a longer term approach.
Yeah.
And the similarity to that is that technology infrastructure and technology e-commerce in 2001 were still really early, and the really early days of the internet. And most people, probably almost all millennials, probably don't even remember dial-up, right? I mean, We used the first form of the internet. I had when I was using that, I had young kids, and you would dial up and hope. And if you wanted to use the internet, and you had gotten knocked off, and it's 10 at night, and your 4-year-old child was sleeping, you were kind of like shut all the doors, hope you don't wake the kids up, because the sounds were so loud. You would wake the kids up, and you would get yelled at for that, in your own house. And you were like, wait a second, there has to be a better way. And eventually it came, which eventually led to more e-commerce adoption. And therefore Amazon and others started to really excel. Same thing here now, right? Like a lot of the tech companies are under a ton of stock pressure. We're growth companies, and the growth of our companies will come over time as we keep getting more and more customers. And crypto as well, as more and more people are entering the space and becoming part of this. This is the new infrastructure, and we'll see all that happen now over the next 20 years. But you can get instant trading and instant success, but you also need to have some patience, for long-term success too.
Yeah, I gotcha. So before we move on to the next one, just real quick, what do you see as far as like the institutions? Are they beating on the door, or is it not even a big thing? They're just like, yeah, we'll get to it at some point.
Oh, I think institutions are beating on the door for both crypto and crypto assets, and getting in there. And then companies like ours, where they look at it and say, wow, you have 1.2 million customers, 5 billion of assets. Your stock's been under a lot of pressure. This is a really good time to get in, with the business. So we're excited about that list of people that we talk to. But we're so well positioned for us for the future, between the loyal customer base we have, the loyal token holders, our shareholders. It's like we see the end game. We see like, hey, this thing is just going to continue to build. Yeah,
I think, you guys are in a great position. I think the retail investor, which is what you're focused on Voyager, is in a fantastic position. And we just took a look at the Simon Dixon video. It's the same thing. It's a mentality shift. I never made any money in the bull markets. I made all my money in the bear markets, just investing and dollar cost averaging. Okay, so thanks for those pieces. Let's move on to our next piece, which is the question that I have. Let's do a rapid fire review, because you had your interview with DJ, great guy, and you guys went over a plethora of items, and it's about an hour and a half long or so. So I'm going to link that video down in the description. But for everybody, let's just do a quick review of what was said. So real quick, rapid fire review. The Voyager loyalty program in 5 tiers. Where are we with that one?
Yeah, we had a meeting, my team in New York. I mentioned that on the DJ show as well. Yeah. Putting the whole process together. We're working on a lot of technology development. One of the things I pointed out was the way the loyalty program was built the first time was simplistic. It wasn't overly complex. Yeah. And now we're building a much more complex, which means the system and the microservices we're building are more detailed. So it's taking us longer, but I think the benefits people will see, such as reduced trading spreads for different tiers and more cash back and more VGX. I mean, there's so many good things that are going to come out of that program that's being built right now.
That's okay, as long as it's safe. I mean, we see rug pulls every day. So I'm just worried about the safety part. Sounds good. And then actually, before I ask these questions, let's just do this, because everybody's going to say the same thing. Well, when is it? When is it? When is it? Give me dates. Give me dates. And just like we talked about in the very beginning, it's not as easy as you might think. So let's just do this. VLP 5 tiers, token burn, the debit card, equities, Canada and Europe rollout. All right. I'm on a long-term frame. I don't really care day to day or month to month. So let's just say like this. Can we do all those things before 2023 Q2? Or maybe?
Yeah, say them again. I think the answer is yes.
Voyager loyalty program, 5 tiers, the token burn, debit card, equities, getting actually stocks on to Voyager, and the Canada and Europe rollout. Can we get that done? Can you guys get that done before Q2 2023? Or even, how about this? By 2023, let's start there.
Yeah, we think we're going to get them all done in the calendar year 2022. All of those done. Now, Canada is subject to the OSC, but everything else, I think that our goal is to get them done in 2022 by the end of the calendar year.
Great. So real quick, token burn, how we doing with that? I know you and DJ talked and you said, look, if you wanted the token burn for the different transactions, it's not really that much anyhow. But maybe as we move into like hotels and travel and airplanes and maybe all the different purchases you make online, we can do burns that way. How we looking?
Yeah, same thing. I think in the aspect of burning tokens that people use for withdrawals or payments, we'll burn some. But, you know, I was having this conversation with someone over Twitter DM today, and I said, there's only 300 million tokens in the marketplace. So what level of burn do you think you need to really make it impactful? And when you start putting numbers like 20 million or 30 million as impactful to burn, where are they coming from? That means people have to be using VGX to pay for withdrawals or pay for, merchant purchases to do that. That's a lot of volume to go through. So I think there'll be I know there'll be a token burn. I don't think it's as impactful. Guiding expectations here. Don't think it's as impactful as people who keep mentioning it on Twitter. There are a lot of trolls that do mention it on Twitter too. But I do think it's not as, hopefully Elon gets that, fixed, right? I mean, that's what we're all hoping for, that the bots and the trolls, at least the bots come out. So, but I do think it's not that many tokens in the marketplace. It's 300 million tokens. And they're going, as I said to DJ, when we have this marketing pool, it's going back to the users of the platform. So shouldn't people be excited about that? Like, I'm going to use the platform. I'm going to use the debit card. I'm going to trade. I'm going to hold assets. And I'm going to get, more tokens back for using this. Aren't you excited about that? And, there's other token programs out there that act like this that people get really excited about. And that's what we're trying to do. Use the platform. Even things like log into the platform like 10 straight days and potentially get tokens. Just like, there's Major League Baseball runs a streak game. Like, pick the guy who gets a hit every day. And if you hit a certain number of days, you get some rewards. Same thing, like engagement, and be on my app and use the app. Those people using the app are going to get more tokens. Plain and simple. And that's what you want.
And I know you guys have some money in your treasury, but at some point you were talking about a buyback system. So, great. Yeah. It's not going to be created out of thin air. That's the big thing. Fantastic. And then the debit card, I've been using it so far. The only time I got it rejected, and you know about this, is because I tried to pay a huge, my IRS bill. It was a high 5-figure number, and I didn't realize that there's a limit. But that's me. That was my first purchase. I'm like, well, I'll just go down to the street to Subway and get a sandwich, and that worked. And then every other place I've gone to, it always works. So debit card, I know you're rolling those out. How are we looking for to the masses end of 2020?
Yeah. So, no, much before that. And I think your issue was you probably try to use the routing number and account number, which is still being tweaked, and that'll be done. That'll be done by the major rollout, and it's not that far away. We're very close to getting full sign off from Metropolitan Commercial Bank, which is our banking partner, and UCO, which is our program manager, two also public companies. And because they got to go through all sorts of compliance checks, Bank Secrecy Act and other OFAC checks and all that. And we're really, really close. And we're going to start bringing more and more people onto into the debit card, inviting them to use very, very, very near future to get more people on it and start rolling it out. Then when we get the full go live from the bank, we'll roll it out to the masses. But it'll be done. It'll be into the masses by the end of June. There's no doubt about that.
I got time. Sounds good. And then lastly, equities, stocks. How are we looking for that one? And that looks like a partnership between you, Fundstrat, and Market Rebellion.
Yeah, most of the work's being done by our Market Rebellion buddies, but Fundstrat has some good research too that we can incorporate in. By the fourth calendar quarter of this year, we expect that to be rolling, and excited by that because I think first forays equities, we'll probably look to add some options in there pretty quickly after that as well.
Gotcha. And in Canada, Europe rollout, same thing into 2023. Again, I got time, probably because I have it, and that's because I'm not impatient on that one. All right. So let's finish this up with this one. I think it's a bigger to expand on what separates Voyager as a broker from the BlockFis of the world, as far as the regulators. As people know who have followed this channel, we've seen this happen with a cease and desist letter with BlockFi, Nexo, and then recently, April 15th, Celsius said, hey, if you're not a accredited investor, you're not going to be able to earn yield past April 15th. If you are an accredited investor and everything else that you have on April 15th and before, you still will. But moving forward, we can't because the regulators that we're working with. So how you guys differ? How does that work out? And then is Brian Brooks, the former OCC, who you guys hired as to be on your board, is he like the ace in the hole? And what has he given you as far as like advice?
Look, I think Brian is very well connected. I've spent some time with Brian down in Bitcoin 2022. I had him in the pod. That interview will come out shortly, where we talked about regulation and talked about his experience with banking. Great person. Love spending time with Brian. And he is he's a key asset for us because he is so well connected. We get to speak to people. We get information about what's going on in banking and in crypto, industries. But we differ from those guys in quite a few different ways. One, probably the most important way we think is what we do with the assets. We strictly lend the assets to major parties where others were actually prop trading, and they were actually, I think BlockFi might have had 5% of GBTC at one point in time. And people are doing things with derivatives on that. We haven't done any of that, and we believe they're customer assets. So the way to generate the rewards was to lend them out and give those rewards back to the consumers. Now, I also said on DJs that you think about this is that you have an 8% inflation, right? We have hyperinflation. It doesn't seem like it's anytime soon. And you're getting rewards on USDC at 9%. And some states don't want you as an individual to be able to earn 9%, which just offsets inflation, which basically helps you stay treading water when prices are increasing. Your dollar you earned a year ago is only worth 92 cents now, but hey, go buy those same goods, which when you think about it also leads to a recession.
Yep.
Because if you can't buy the same goods at your local hardware store, supermarket, and you're buying less, their profit margins will be less. So what do companies do when their profit margins are less? They go to their highest cost. What's their highest cost? Usually employment. So yeah. They cut employees, they cut salaries, they cut employees, they cut bonuses. That means the disposable income people have to reinvest goes down. So doesn't crypto serve as one of the answers to offset an inflationary environment and a recession? It surely does to me, surely does to a lot of economists. And why are we letting people outside the U.S. earn rewards when the U.S. is, pushing back on that stuff? So to me, I think the differences are, as I said, how we do the assets, how we talk to customers, our information that we put out there. I think one of those parties didn't properly disclose or said that they were fully collateralized when they weren't. Yeah. We lend it. That's what we do. And so we think there's significant differences.
Gotcha. So I guess just keep working with the regulators until we get the place where we want to be. Okay. So Steve, that is it for this one. Any last words of wisdom for the retail investor out there being hit hard with this bear market?
Yeah, I would say, money is made in the bear markets, to be honest with you. It's, you have to have a little bit of a gut to do it and, a thick stomach. You got to be able to, keep investing in, find the opportunities on the different coins that you're comfortable with. This is truly when millionaires get made, is in the bear market, by making the bets, taking the opportunity to invest and doing it on the DCA basis too, right? You keep pushing that point home. And I think that's important. You don't have to take your whole 10,000 and bet it right now. You could do it over $2,500 bets. I shouldn't say bets, but $2,500 investments, over time. So just keep doing it that way. I think that's the right way to do it, rather than trying to make one investment and one big dollars right away. DCA your way into different coins, DCA your way into different stocks, and you'll come out in the long run. The markets will rebound at some point here. It's just a matter of when. Short-term pain, long-term gain.
Yeah, exactly right. And two things. First part is as far as like betting, there's no regulation for that. So go ahead and just do whatever you want as far as betting and gambling in Las Vegas. And the second thing is that Peter Lynch even said, everybody has the brain power for investing. It just all depends on, do you have the stomach? Steve, we appreciate you coming by. Thanks so much.
Thanks. Appreciate being here.
Great. And that was it. So I know that was a little bit longer, but I think it gives you the right perspective as far as the retail investor. I mean, I know the markets suck. I was there when markets sucked too, 2018, 19, and 20, all the way down. But if we just take a step back, when in doubt, zoom out, all the same things I've been saying forever, it really does make things manageable. And just take a look at the insights of some pretty interesting people who have been down the same path you have. When we took a look at Simon Dixon, 2011 investor and major investor in all of these different types of crypto exchanges and things like that. And Steve, who was ex-CEO of eTrade, and just how far along things have been. So that is it. So look, if you like today's video, give it a thumbs up. If you don't like it, give it a thumbs down, but just tell me why so I can fix it. And also consider subscribing. A lot of things we talk about are time sensitive. And now if you got to take off, that's cool. It's been 40 minutes, but if you want to stick around for some Q&A, let's do that right now because there's a lot of questions I got to go over. All right, let's go over. Let's hit it up. So. Okay. I started some because I thought it was so interesting. So let's see here. First one. Let's see. Banners. Let me get rid of this. Comments. Michael M. It's a live background, but it's fake, just like the screensaver on a computer. Look at the blurred outline around his head. I don't know what this is. You can't do that unless you're Zach King for green screens. Okay, anyhow. Great time to buy. I have to agree. Beardy Day. Rookie numbers and the likes. Yes, that's true. This one here, Tony and somebody else. Maybe. Hello there, Rob. The Mrs. Carol Franklin, who you recommend to me, doesn't seem to be responding to my messages. Can you get me in touch with her? I need some of the Bitcoin I sent to her to pay the rent. Jesus, sweet Mary and Joseph. So look, Tony, you got scammed. That's just really what it comes down to. And you see, like, let me Brad something here so you can see what I'm talking about. Okay. Let me get this out of here. Comments. Okay. See that thing underneath me that says Dan will never contact you? I will never contact you, period. And then also, if it's from an email or something, I don't know how you got in front of this person. If you're not a bot yourself, which I'm highly suspect that you probably are, but just so everybody knows, I'll never contact you. I get 20 offers a day for some stupid project that's out there that I never, 99.9% I don't even look at anyhow. And only the ones that people bring to me. So I don't need you to, I'm not going to reach out to you because I need you to help me with finding projects. Trust me, I got that taken care of. So I will never contact you. Let me say it again. I'll never contact you, period. So then also there's a video you should check out. Because people say, oh, well, it was from your email. Well, it's because they can spoof emails and it's very easy to do. I lay it out exactly how they do it and how you can check it very easily with a very nice piece of information from Google. So just check that out. Just look up digital asset news, lost everything, and you'll find exactly what I'm saying here. I hate to be harsh on that one, but it really does like get to me, the scams, and you guys know that. So like when I see these things, I'm like, come on, are you serious? I on every single show, I got a thing that right underneath me, it says, Dan won't contact you. Unbelievable. All right. Off my high horse. Yes, I know. And then I bought a long gate. That's my I'll never see again. Yeah, there's a lot of trash out there. Sorry. Kapokon says, used to buy lots and lots of coins, but I'm going to focus on specific projects. That way, hopefully better. You know what? I can't give you investment advice, but that's what I've done. Like I used to buy a ton of stuff in 2017. Most of it just went to zero. So live and learn, I guess. Rob will jump in the pool in Bitcoin. It's 100K. Yes, I will. And then Alchemist, he says cash is trash. I don't think Alchemist believes that. I got to tell you, cash is great. If you want to like like hide transactions. Like there's nothing better than cash. Nothing. It's why the cartel, it's the currency of choice with the cartel. And then also our legato says inflation is more like it was in the 70s. You know that in the 70s, late 70s, early 80s, the president of the chairman of the Fed Reserve, Volcker, he actually raised the rates to over 20% because inflation was 14.5%. That's what was recorded. So right now we're seeing some pretty heavy inflation. So wouldn't be surprised if we see Jerome Powell come out and go, hey, let's keep raising. And we already know he's going to come out 6-7 times to do that. So we'll see. All right. So that was the comments that I started out that were interesting. And then Cat Nick says, are you buying Doge? I did buy a little bit. And you know why? Because if apparently Elon's going to buy Twitter, right? And he's got this big fascination with Doge. So I was like, fine, I'll buy a little bit. Again, is this something that I'm going to put all my money into? No. Is this something I'm going to put like 50% of my portfolio into? No. But I thought, why not? We only live once. Might as well just buy a little bit of Doge and go from there. The majority of my holdings in my portfolio is still Bitcoin and Ethereum. That's just how it goes. So yeah, that's what it is. Also, if you want to see me do some really degenerate plays, go over to my second channel, Digital Asset News DGen. That's where I put a very small percentage of my portfolio, and I expect to lose everything because it's really gambling, not investment whatsoever. Stefan, thanks for being a good man. I try. Not all the time. That's just how it is. But I appreciate you. Thank you. Let's see. Here's a good question. Seattle Paddler. Rob, do you think crypto will be in this huge cycle now with institutions being it, or do you think it'll still follow 4 years having cycles? I thought there was a big 4-year cycle, and we laid it out, and I kind of based a lot of things on it. And now I just see like, yes, I know the next Bitcoin halving is coming up in 2 years. And yes, there's going to be less of the supply as I go from 6.25 to 3. Whatever the heck it is. So I think that, yes, the 4-year cycles will kind of follow, but not like it was before. Not like when Bitcoin went up 1,000x. It can't go up 1,000x. The market cap is just too high right now. I mean, it might be able to get to $1 million or $2 million. That's after a pretty long time. Again, I'm here for the long haul. So to answer your question, I think that'll be a little bit more like the stock market with some parabolic bull runs up, but not like these huge 1,000, 10,000x type of thing. But I do think there's still some parabolic runs left in it. That's for sure. All right. One day at the gym. I jump in the pool every morning. It's cold. Here's another question. Question number 3, what about World Mobile Token? Still doing pretty good. I'm hopefully going to meet those guys in London when I go down there next week. So I'll let you know. But seems to be going pretty good. I mean, they're still making progress. That's all I care about. I should do an updated video. Need to get Mickey Watkins on, CEO. Let's see, what else? No, that wasn't it. Yeah, hey man, hey, great interview, DJ. So I just took what you said and I really wanted to get the perspective from Steve because you already asked the questions as far as like, what's going on in the loyalty program? What's going on with the Europe? So I wanted to get it from a guy who's already, been there in the early 90s and just kind of give people like us a little bit of perspective of what the markets will do and how to, mentally wrap our heads around these bear or bearish sentiments and things like that. That's all. Investor Brent says, is there an expo in London? Yeah, it's a guy from Coin Bureau is putting on something. I get to talk about how to minimize taxes. Probably one of the more boring talks, but it's not so boring when you're talking about 20, 30% losses. It's not how much you make, it's how much you keep. So that's what's up. And then last one, we got to get out of here. I'm a holder with too many alts. Someone's suggesting I convert them to Bitcoin and ETH. I'm so underwater. Would this make sense right now? I can't give you any advice, but I can just say that right now, if it was me, I got to remember a lot of things are going to zero. A lot of these things didn't come back. I'm not going to give you any advice. I'm just going to tell you to look at 2 different projects, a dash of salt, and take a look at the crypto dash and take a look at the crypto called salt and just take a look at their stories behind it. Because what goes up must come down, and not all the time will it rebound. And that's it. So look, thanks so much for sticking with me. It was a long one today. I appreciate you guys coming in and just hanging out. But that's it for today. Thanks so much, and I'll see you on the next one. Adios.